All right, I wanted to. Well, number one, it's a little late where I am, and I don't want to. I want to be a little quiet, and I'm gonna try to keep my voice down as best I can. But one thing I want to talk about is focusing on trading small. You know, when you're starting out, I think you're. Let me put it this way. I think one is far better off in the long run to push themselves to not trade a heavy position. And what I mean by that is, don't worry about trading the E-mini unless in other words, have the ability to reduce your position, 1/10 of a position, so to speak. You know, for example, I think if someone can afford to do it, I think they should trade ETFs or stocks starting out because I know it's 25 grand in an account or $25,000, but you can trade just so small, and it allows you to get practice doing the right thing. And one thing I've just learned over time is, and I think anyone will tell you it, is that trading is more about, and we all know it, it's doing the little things right over and over the course of a long period of time. So, I think someone's far better off, instead of trading one E-mini contract, work on going to live and trading 50 shares of something. One great stock is Apple. Now, I really like Apple because number one, it's not that expensive, compared to the Spider. Here's the Spider, and it's over twice as much. Second, it's just got really good swings. So, what I'd recommend for people starting out is, look right here. So let's say, I don't know, you say, gee, it's always in long. I'm going to buy, 50 shares and put my stop down here. Well, if you do that, your risk is from 10.83 to it's about 80 cents. So, if we think about it, 80 cents times 50 shares is $40. So, if you think about it, this moment, what are the odds we've seen the low of the day? Well, probably 60%. So if you buy, put your stop down here, you're probably not going to get stopped out. And you're only risking $50, I think. Yep, I'm sorry, $40. So you could buy at the market, and maybe you say, well, actually, I don't want to make this complicated. Normally, I'd say, maybe you get out and look to buy again here. Maybe there's a few routes. But here's where I'm getting at. You have many options. Maybe you say, gee, this is climactic. I'm going to get out of 25 shares here, and I'll look to buy more lower. That's an option. Or maybe you just say, you know what? I'll trade. I think I'm so confident that this is probably the low of the day. I think it's 60%, if not more, that I'm long 50 shares, risking $40, and I'm willing to buy another 50 shares at a 50% pullback. Well, and this is a little more than I'd recommend for people starting out doing, but sorry, highs up here. Maybe you buy more here, and then you say, well, gee, this is pretty strong. Instead of getting out up here, maybe I'll take 50 shares off, I'll take part off, and I'll swing the balance. But now your stop's down here, and you hold. And, you wait for a second leg up, maybe you take another 50 shares off. I'm sorry, you take 25 shares off. and your stop's far away, so it's okay to get out up here. But you could probably still hold long and expect to retest. And maybe you say, gee, small price second leg up. The reality is you can probably hold until the close. Now, think about it. First, let's keep it simple. Let's just pretend you didn't scale in. You bought this close at 10.83. So, I gotta write this down kind of, but so 1110.83 was your entry. Let's say you exited, I don't know, 25 shares up here. Or maybe you exited 25 shares at 1 times your risk. I wouldn't do that because this is pretty strong up, but let's say just for fun, you got out of your 25 shares up here. So 111 point, let's just say 72. Sorry, I've kind of working on building some charts, and that's one that I haven't built yet. But 111.7 minus 10.83, that's 87 cents. So even though you locked in 25 shares, you just made $21. And I know what you're thinking. You're saying, that's certainly not enough to make a living. But you're getting real practice with real money of doing the right thing. Let's just say, let's say it was 500 shares. So you took $250 off. Well, guess what? You just locked in $217. The whole point is, you can trade really comfortable and, do fairly well. So what I'd really, really advise people is to look for just swing setups, kind of like here. Always in long, buy the market, stop down here. First down will fail. Maybe you take profits up here, or maybe you just say, I'm just going to take half off at 50 cents. Now, the key is, and I know this because I'm guilty of it so many times, is, let me back up. Let me kind of share a story. One thing I've, for a long, long time, tried to do is, I wish I could go back and immediately start on trading stocks. In other words, instead of focusing on the Emini, going straight to the spider, because it would allow me to work on simply just practicing locking in profit along the way. I think one problem with the Emini is, let's just find this day. So 11/16. So if I go over here to, here's the Emini. And by the way, I still plot. You can trade the spider and plot on the Emini. I do that all the time. But 11/16. Oh, well, duh, I'm sorry. I was thinking about this spider, and this is Apple, so that's obviously not going to work. But, think about it. 500 shares is about the E-mini, so if you were trading the E-mini, if this was the E-mini, hypothetically, then if this was the E-mini, your risk would be $1 right here. So, your risk is your risk. And the problem with that is that's $500 risk. And that's way more than most people should trade starting out. So I could, if I was trading this and I was starting out, I could say, my max risk is 100 shares. So buy 100, I'm risking $100. Probably won't get stopped out. Keep going up. Maybe I say, consecutive buy climaxes, I'm just going to get out, and you make over $1 on 50. Maybe I take half off, and you make 50 cents times, let's just say you make $1 on half your shares. Well, that's $50. Then I say, you know what, I'll hold as it's always in long, exit on the close, and basically make another $1 on 50 shares. So you basically made $100. Here's another example. Always in short, sell the close, put your stop up here. Maybe you take 50 shares off at 1 times your risk, and another 50 off at 2 times. The whole point is, I think traders should practice more on just scaling out of a trade and not try to be always in starting out. I think it's something you build to. So if I was starting out, here's my advice of the day, and then I'll quickly go over the Emini. If I was starting out right now, and what I would do is I would just look for breakouts. I'd look at chart. I would pick, for me, I would pick Apple and the spider. And the spider. And I would just look for 1 or 2, maybe 3 40-cent trades. That's the equivalency of 4 points in the Emini. And I would just look for 1, 2, or 3 swing trades a day. And with that, let's look at today. I didn't watch Apple today, but I'm probably going to watch it tomorrow. Let's say by some magic, you just happen to, I'm just kind of kidding with the magic part, but let's just say you happen to see Apple here, and you said, you know what, always in short, bad, bottom, maybe we'll test this low and test back in here. I'll sell at the market, put my stop up here. Well, my risk is about 50 cents. So I only want to trade 100 shares. I'm risking $50. I'll take, maybe part off at 40 cents. So my stop, my entry is, 109.80. Here's 109.40. So we just made 40 cents. So take part off it. So take 50 shares off at 40. You just make $20. And maybe you say, wedge bottom. You say, okay, sideways. Maybe. No, maybe you get out somewhere here. But anyways, it allows you to get practice on doing the right thing. Where's another one? Just things like this, here, sell the market, stop up here, take maybe part off at 40 shares, or sell 100 shares, sell 50 shares, take, half off at 40 cents, somewhere down here, and just hold. But no matter what, look at these bars, 105,000 shares, or actually, it's there's like 220,000 shares being traded on each bar. So do you really think there's plenty of volume? Think about it. If you have to have 25,000 in an account to day trade stocks. TradeStation, I'm sure most will give you 4 times leverage. Well, if you don't want to risk more than 2% of your account, I don't want to say that, but you can easily trade 500 shares. So what I would recommend is start with 50 shares. When you can do 50 shares and you're profitable, commission's going to take away a lot of your profit, but that's okay. When you're comfortable with 50, go to 100, then go to 200, 300, and then when you're up to 500, think about it. I sell 500 shares right here, make 40 cents on half. So 250 times 40, that's 100 bucks. I sell here at 109.9. I get out at, maybe I get out at $1. Okay, 500 shares, $1, 500 shares. It's $500 times $100 on taking part off. It's $600. So again, sold here. I took part off at 40 cents, and I took the rest off at $1. Now, that's a hypothetical. I didn't actually take that trade, but that's a very sensible thing to do. If you were trading the Emini, that you're risking a heck ton for someone starting out. You're risking a lot per contract. So the problem is most people starting out with Emini only trade one contract. Well, that's 0.25 to, that's about 30 cents, about 150-ish dollars right there. Well, at some point, if that's $150, that's about, when the market gets down to here, you're risking about 6 points from this high to this high. So it's a lot of risk. So overall, I've got to keep this video short. I apologize for whispering, but it's late and I don't want to bother people. But I'm kind of tired. Overall, don't focusing on trying to make too much starting out is a trap. It's very risky. I just think people do far better when they can make themselves feel less pressured. And if you can $40, $50, making $50 on one trade, that's not that, it's not a lot. But if you're making it with real money, it's real practice with real money, and all you got to do is increase from there. So just something to think about. Real quick with the Emini spider, this is the Emini, but limit order market, sellers above, but the bears couldn't even make a point down here. Probably always in long on this bar, bulls buy, and maybe they get out here, but they got to get long again. Then maybe they get out up here. But, even with that, here's the spider. So I say, I'll buy at the market stop down here. Maybe I scale in more. Maybe I trade 50 shares, buy 50 more here, stop down here. Maybe I, take, if my entry was 221, maybe I get out at 221 point. I don't know, maybe I take part off at 20 cents, and then I get out more up here. There's many choices, but always in, bulls buy. If they get out here, they got to get long again. If they get out again here, if they get out, they've got to get long again, probably above a bull bar or on one of these closes. If they get out again, maybe they buy, but kind of tricky because of these mini bear bars down. Alright, sorry for being quiet. Hope everyone